Good morning, good afternoon, good evening, and welcome to our 305th weekly webcast. If this is the first time you're joining us, welcome. If you've been with us before, welcome back. So the way this call works is this is an AMA like you see on Reddit, meaning you can ask me anything. You can ask me business questions, investing questions, career questions, personal growth questions, and my humble goal is to help you take your career to the next level. So without further ado, let's begin, and thank you. First question I've got here is from Ray. Hi, Ray. Ray wrote, do you put a limit buy order and sell order? Can you show us an example? Yeah, absolutely. You never want to buy at market. And the reason is because stocks can be very volatile. You can save a little bit of money by being more disciplined by telling your financial service or your brokerage service to buy at a certain level. Let me show you very quickly here. Okay, so let's go over here and let's just go here to Yahoo Finance. Okay. And what I'll do is I will enter in the ticker for Tesla. Okay, say you've done your fundamental research on Tesla, your valuation research, and you think it's a great long-term investment. So what you can do is you can actually put in a limit order, maybe to buy at $360, for example, if the stock is quite volatile. Right. And sometimes you'll see some investors will actually look at support levels and resistance levels. So a lot of people might think this here is a potential support level. So they want to buy around this level if it doesn't violate that support level, for example, which might be 360 or so. Okay, so there's nothing wrong with putting limit orders. You can make them GTC, meaning good till completed, or good for the day if you want to. You'll save a lot of money this way. Yeah. Now, never make a position in your portfolio more than 5% of your entire portfolio. And that's just good risk management. So what I recommend doing is after you do your due diligence on a company and you complete this entire 100-step write-up, which I offer my MBA students, then what you want to do is value the company using 3 different valuation metrics, as you can see here, and then start to put the position on. Don't buy it all at once. You know, I usually start with 50 basis points, meaning 0.5%, and I'm very patient to buy the position once it holds a certain support level. The bottom line, though, is you want to look at fundamentals first, valuation second, and technical analysis a distant third. Great question. Next question is, what is the minimum market cap or float that you recommend buying, or the minimum trading volume per day? Yeah, so I only recommend buying 10% of the average daily volume of a stock. And the reason I say that is if, God forbid, the market turns or the investment thesis changes and you want to sell that position, then selling a 10% of the daily volume position is not going to move the stock very much. Otherwise, what happens is if you buy illiquid stocks, they own you in a down market. I'm happy to show you an example if you want more details. That's not going to be applicable to you, though, when you buy mega caps like Tesla. It'll be for smaller cap companies or companies that are part of the Russell 2000 index or the Wilshire 5000 index, for example. Or is it 3000? Can't remember. All right, moving on. Next question is, how can exist such valuations for Freshpet, ticker FRPT, at a 160 PE ratio, or CrowdStrike at an 800 PE ratio? Yeah. So sophisticated investors don't look at earnings this year ever. Okay. You want to forecast earnings in your financial statements using the financial models I provide you with my MBA program. You want to forecast your earnings per share estimates 5 or 10 years into the future. Then what you want to do is you want to value the company based on your earnings estimates in 5 or 10 years. So what do you value them at? Well, if you were to forecast a financial model, and it's a lot easier than you think, you spend most of your time forecasting revenue, and then most other items become a percent of revenue. Okay, so say you forecasted net income and earnings per share 5 years out. And let's say in year 5, you've got $1 in earnings per share. And earnings are growing 20% between years 4 and 5. So what do you value that $1 in earnings at in 5 years? Well, a simple way to do it is to look at the growth rate, which is 20%, and value the company based on 20 times $1 in 5 years. If earnings are growing much faster between years 4 and 5, let's say 30%, then you'll throw a 30 multiple on that $1. If earnings growth is only 10%, then you'll throw a 10 multiple on that $1 in earnings. Always think longer term like this. And I remember when I worked in the hedge fund industry, I owned Amazon as well as LinkedIn when it was publicly traded before Microsoft bought it. And people would say to me, Chris, you're cray-cray to own Amazon and LinkedIn. These are widow makers because they both trade at well over 100 times earnings. And I would say, no, you're wrong, respectfully. You're wrong because they actually only trade at 3 times my earnings estimates in 5 years. And so if you're long-term focused like that, you don't have to worry about the path of the stock, just the destination, and you can sleep at night as well. Okay. All right. Next up, Ray wrote, is this still good? Founders are no longer in executive roles, but remain involved as advisors. So I wrote a very controversial article when I worked in venture capital in a publication called VentureBeat.com. You can search for it. And the title of the article was, When All the Founders Have Left a Company, Investors Should Run for the Exit. And I firmly believe in that. In fact, business schools don't teach you how to analyze companies correctly. They don't teach you how to analyze management teams. You always start with the management team whenever you're doing investment research on a company, which is what I do up here. We start with the management team, then we look at all the other stuff. So I know there's an exception to this. Once per decade, investing in a company where the founders have left might work out well, like Apple, for example. But what happens is when the founders leave a company, then the senior executives, all they care about is climbing the corporate ladder. And if these senior executives take a risk with a new product, for example, and they fail, they're no longer climbing the corporate ladder and they could lose their job. So the biggest risk for them is taking a risk. And so as a result, bureaucracy sets in, innovation dies. And I've thoroughly back-tested this over the years. It works exceptionally well, especially with technology companies and newer IPOs. Yeah. All right. I don't want them to be advisors. I actually want them to work at the company. Yeah. Okay. All right. Next up, what is your opinion on growth stocks that have not been profitable yet? Let's say Cloudflare. Would you first wait for them to become profitable? Absolutely not. Now, I'm not telling you to buy Cloudflare or any stock, but there's 2 different camps of investing. Okay. There's value investing, like Warren Buffett, who likes to buy stocks that are cheap and certainly have robust earnings and cash flow today. Then there's growth investors like myself that like to buy companies that are not that profitable today, but they're growing very, very fast and they'll be incredibly profitable in the long run. You're either a growth investor or a value investor, nothing in between. And a lot of students, myself included, when I did my MBA in finance at Columbia 8 million years ago, a lot of students are value investors initially because they're taught, hey, buy when it's cheap. I don't think that way, though, because I worked in venture capital and I managed hedge funds where I invested in tech stocks. So what I want you to do is always think about your financial model this way. So a company like CrowdStrike, for example, they could be very profitable today if they fired all of the R&D people in the company. Okay. They could also be very profitable if they fired all the salespeople in the company. But the problem is, yes, they'll be profitable today, but they're sacrificing future growth. And that's why, per the first question I answered today, I always want you to be very long-term focused and forecast financial statements out 5 to 10 years and value your companies based on your earnings estimates and nobody else's based on your earnings estimate in 5 or 10 years. Yeah. And if you have follow-up questions, please let me know as always, and thank you. Okay. Next question is, where do you take ratios for a whole sector? Current and historical. Please show an example. Yeah. So what you can do is you can look at a couple different valuation metrics. One is price to earnings, if you want to, for each individual company. You want to look at this year's earnings and last year's earnings and understand what the price earnings to growth ratio is. And so I like to look longer term, but this is an easy way to just do a screen. But so, for example, if a company, like if we look at the S&P 500 historically, it trades at 15 times earnings. And the average company historically in the S&P 500 grows at 15%. So that means that the PE to growth ratio of the S&P 500 is 15 divided by 15, which is 1, a PEG or PE to growth ratio of 1. Now, if there's a company in the S&P 500 that's growing at 20%, then it should trade at 20 times earnings. If there's a company, and this is very simplistic, but it's a good benchmark to use. If a company is only growing earnings at 10%, it should trade at 10 times earnings. So you have to look at, when you're looking at individual companies and sectors, you have to look at the earnings growth rate. What you can also look at is what's called price to revenue. And whenever you look at valuation formulas or any fraction for the rest of your life, I always want you to assume that the denominator is a number 1. So if a company has a PE of 10, it means for every $1, investors are paying $10. What if the company's not profitable? Well, what you can do is you can look at a price to revenue multiple. So for example, if a company trades at a price to revenue multiple of 5 times, that means for every $1 in revenue on the denominator, investors are paying 5 times for that. Now, every sector is a little bit different. So I remember in the summer of 2012 when I participated in 3 massive cloud software IPOs. It was Splunk, ticker SPLK, which got bought by Cisco last year, ServiceNow, ticker NOW, as well as Workday, ticker WDAY. Back then, all 3 of those companies were trading at between 15 and 20 times revenue. So everything is relative based on the sector. Now, the third way to value a company is looking at discounted cash flow analysis. I can walk you through that if you want me to. The bottom line is you always want to value companies using 3 different valuation methodologies so that you take an average target price of all 3, and that will minimize the margin of error on one of your 3 valuation methodologies, which is usually DCF. Okay, next question is, if you apply a screener for price to book, return on equity, debt to equity, revenue growth, insider ownership, current ratio, which is current assets over current liabilities, you are left with no choices. So it seems you need to do some compromises as an obligation. I would just pick one initially. Now, if you're a value investor, you definitely want to look at price to book. If you're more of a growth investor, you can look at price to revenue or price to earnings divided by growth, the PEG ratio. Next up is, what will happen if we buy the same stocks that Warren Buffett holds? Why won't we be as successful as him? Won't they produce the same return on investment for the next 5 years for him and for me? No. The reason is because by law, companies that manage over $100 million, like mutual funds or Berkshire Hathaway, every 3 months they have to disclose to the public what they bought and what they sold, meaning what they own in their portfolio. So Warren Buffett might have bought the heck out of a stock that cratered in months 1, 2, 3, and the stock is way, way higher when they file their 13Gs directly on SEC.gov. Yeah. But Warren Buffett's very long-term focused. Like when he bought Coca-Cola years ago, around 1990, he told himself, like he tells himself now, whenever he buys a stock, he always assumes the market's going to be closed for 10 years. As he said, the longer the view, the wiser the intention. And I certainly agree with that. Yeah. Day trading does not work. All right. Please keep typing your questions, everyone. All right. Next up, how can one be sure a company will be profitable one day? Let's say Shopify. Yeah. So every growth company, every company that's growing, eventually it can't grow anymore and it switches over to a value-based investment. So when a company stops, and remember, you're either a growth investor or a value investor. So when a company stops growing, then growth investors say, hey, I don't want to own it anymore. And it's stuck in no man's land and it will transition eventually to value. Don't ever buy a stock when it's in no man's land. I call that investment purgatory, only because most people are either a growth investor or a value investor. Now, what could truncate the transition from growth to value is if an activist hedge fund or a private equity firm buys a big stake in the company and forces the company to cut expenses. That can be more of a value investment. And for those of you interested in real-time news, you can always do a search on Elliott. Elliott Management has done this a lot with software companies like BMC, CompuWare, I used to call CompuScare, et cetera. And I think today with Honeywell as well. You can also you can look at other activist investors like Carl Icahn that will buy a big position in a company, like 30%, muscle their way on the board, force the CEO to resign, and make the company transition from growth to value or unlock shareholder value. Now, a classic example of this is years ago, I invested in eBay. And eBay was a problem child. And the reason why eBay didn't go anywhere for a long time is because eBay had a value component, which is the sleepy auction business that throws off a lot of cash. And during recessions, people sell more stuff. So it's countercyclical. And eBay also owned PayPal back then. And the value investors loved the sleepy auction place business. The growth investors loved PayPal. But nobody owned it because the growth investors hated the auction business, and the value investor hated the expensive, high-growth PayPal business. So in came Carl Icahn. And what he did with his hedge fund is he bought a massive stake in the company, and he forced out John Donahoe, who's the CEO, great guy. I met him a number of times, big, tall guy, used to work at Bain. He was the CEO of Nike, just got pushed from there as well. But he pushed out John Donahoe and the management team, and he forced the company to break up into two pieces. One was eBay, right, the marketplace, the auctions. The other was PayPal, and that unlocked enormous shareholder value. These two companies separately were worth a heck of a lot more than one. Okay. All right. Next up, on page 165 from the book, One Up on Wall Street. Got it right here. Okay, so on page 165 in the book, One Up on Wall Street, there's a graph of Dow showing how in some moments stock price is less than earnings. How is that possible? Let me go there really quickly. 165. Hold on a second here. Okay, I got it right here. Okay. Yeah, on one axis is earnings. On the other axis is net income. Or so you got PE and net income. Two completely separate things. Okay, so net income is how much money a company makes. Earnings per share is net income divided by the number of shares. Yeah, so completely different. And it all depends also on if the stock splits and many, many other factors as well. So I would ignore that chart. Yeah. But what I love about this book, and I recommend you all read it, is Peter Lynch. So he managed the Fidelity Magellan Fund back in the 90s. He's probably the best growth investor that's ever existed. And read this book. It's called One Up on Wall Street. And what he talks about here is only invest in stuff that you understand. So he gave a great example in here of how he and his wife would test out products and invest in those companies. I don't know if you have an iPhone, you love Apple, buy Apple, for example, right? And so only invest in what you understand and think long-term as well. He is the quintessential growth investor. Okay. Yeah, keep the questions coming. I love it. All right, next up, I have got here Carolyn, who wrote, "Good morning, Chris. Happy birthday." Thank you. I turned 53. Fuck me. 53 on Sunday. But the average life expectancy today versus the 1950s is 26 years longer. So I'm only 27. But I've got the maturity of an 8-year-old. And when GTA 6 comes out, y'all know I ain't showing up for this weekly call for at least a month, okay? All right. All right, next up, Andre, great to see you. Andre wrote, "Today I'm meeting potential investors to taste my product. What should I wear? And do you have any advice for handling curveballs during the meeting? Thanks." Yeah, absolutely. So step one in terms of what to wear to an interview or an informational meeting, just go to the LinkedIn profile of the people you're meeting with and see what they wear, okay? Or you can go to their website and the About section of their website and see what they're wearing there as well. Now, what I usually do, if I'm not sure what to wear, is I show up just like this with a suit on, and I bring a tie. And at the front desk before I go up the elevator, I always ask the person at the front desk, do they wear ties in here or not? If they don't, I gut the tie. In terms of questions that you can't answer, so what I would do is this. If they ask you something and you're lost, you say, well, let me get back to you on that. Thank you. You write it down, okay, because they don't want anybody to BS them. You write it down, and then in your thank you message you send them the second you leave the meeting, you say, John, for example, great meeting you today, semicolon, I enjoyed our conversation. In terms of your question on X, I did some research, and here are my humble thoughts. Boom, boom, boom. Thanks a lot, your future boss. Thanks a lot, Chris. Do it like that, always. Yeah. Yeah. And I remember when I interviewed at Goldman Sachs, I went through 40 rounds of interviews back in July of 1998. It was so hard, man. I met with this one guy. His name is Aaron Lieberman there. Good guy, but he was drilling me. And he started high level. He said, what markets do you follow in Europe? And I said, the CAC 40, the Deutsche Börse. And he said, okay, in Germany, give me one company that you follow. And at that point in time, I said Daimler Chrysler. He then said, who is the CEO? I said, Jürgen Schremp. He then said, who is the CFO? And I'm like, I don't know, but I'll get back to you. It's an interview tactic. Yeah. They want to see you're proactive as well to get back to them. All right. JK wrote, top of the day to you, Chris. Thank you. Great to see you. Good morning, Kuban Media. Moving on to the Vanquisher, who wrote, if I haven't used my LLC, meaning my limited liability corporation, if I haven't used my LLC in over 2 years, but I never had a business license. Do I still have to worry about the IRS or any other law enforcement situations? You might want to shut down the LLC so you don't have to pay the annual fee of $800 if you're here on the left coast in California, or much cheaper in Delaware. Most companies in the United States, a lot of them register in Delaware because the founding fathers were based there. So there's lots of lawyers there. They can crank out legal documentation for a very, very low price. Instead of giving you legal advice, what I recommend doing is talk to your accountant, or you can go to LegalZoom.com and set up a call with a lawyer for a very, very low fee. Okay. Next up, Sanjay. Hey, Sanjay. Sanjay wrote, hey, Chris, Charlie Munger, who passed away recently, he was Warren Buffett's right-hand man. Charlie Munger says EBITDA, meaning earnings before interest, taxes, depreciation, amortization, is BS earnings. Can you explain more about EBITDA? Yeah, absolutely. So what a lot of people do is when they analyze companies, they look at revenue minus cost of goods sold, and then they deduct operating expenses like sales and marketing, general administrative, as well as R&D. Then that gets you to operating profit, okay? And that's also called EBITDA, earnings before interest, taxes, depreciation, and amortization. And the reason a lot of people like to look at EBITDA instead of just net income, they like to look at EBITDA is because tax rates are different and interest rates are different for different companies, right? So below EBITDA, you've got interest, taxes, depreciation, amortization. And so if you're comparing a Swiss watch company to an American watch company, say Timex, well, the tax rate's going to be different for a Swiss watch company than it will be for an American watch company. So it's apples to apples comparison if you look at EBITDA. I'm not a big fan of it either. And the reason Charlie Munger is not a big fan of it also is because he's more of a value investor, or was, God bless him. So he likes to look at the bottom line, meaning cash in, cash out. Okay, so, and then if you deduct depreciation, it's a non-cash expense. So that's how I'd explain that. Yeah, and for more details on that, you can read Graham and Dodd's book that's called The Intelligent Investor, that Warren Buffett said is his Bible. And I remember Warren Buffett, he came and guest lectured in one of my classes at Columbia. He also went to Columbia. It's the only thing I have in common with him. And his wife was there. God bless her. She passed away. But his wife was there, and she was teasing him because she said on their honeymoon, the only book he brought was The Intelligent Investor. And that begs a question for everybody here. What book would you bring? You can only bring one on your honeymoon. And that might tell you what your passion is in life and what your next career should be. All right, next up, Eddie Cuba. Hey, Eddie. First time I see you on the call. Hope you join us again. Eddie wrote, hey, Chris, I have an amazing business idea that upon my research, it has not been created yet. And I'm trying to start the manufacturing of my prototype, but I need to make the planning first since I'm not planning to fail. Yeah. And I don't have the money to pay the MBA program. And I want to ask, if I send you an email, can you help me with the planning? Thank you for your experience and knowledge. Yeah. So failing to plan is plan to fail. You have to write a business plan first. We're about to do a promotion where we're going to give away my complete business plan course. If you want to get it, just go to my website, okay, haroonmba.com. At the bottom here, just download this book, enter your email, and I'll make sure that my team sends it to you, the complete business plan course, for free. Yeah, thank you. All right. Next up, Ilker. Hey, Ilker wrote, hey, Chris, great to see you doing better. Thank you. I'm feeling much better today. That's why I'm standing. Last week I was sitting down. Yeah. It's a really bad flu going around. My brother's a doctor in Canada. He said in his 30 or 40 years of medical experience, he's never seen this many people sick, even during COVID. So everybody be careful out there. Wear a mask and get the flu shot, please. The question is, can you do an example analysis with Palantir stock to see if it's a good buy if we were to hold it for 10 years? Yeah. So I don't give investment advice, but instead of giving you a fish, I teach you how to fish. Okay. And I have to disclose this. I was a venture investor in Palantir, in venture capital, before it went public. Yeah. So what I recommend that you do, I know you're in the MBA program, go to EMS 4-2, that's Economics Management Strategy Semester 4, Class 2. Download this spreadsheet. Complete the whole thing so you can decide if you want to invest or not. What will come out of this, and this is dummy data, is a 1-page executive summary and a 100-page due diligence report and all this stuff here. And then during office hours, which starts at 10 a.m. today, Zoom office hours, you can show me your financial model. I can walk you through the whole process. Thank you. Yeah. Okay. All right. Next question is from Loic, who wrote, hi, Chris. What would you recommend to keep in your office desk drawer to get through the day more easily? For example, hand lotion, nicotine, gum, caffeine, etc. Yeah. Okay. So please do your research first. Okay. But I do this stuff called Neuro. It's memory and focus gum. Okay. And this is caffeine free. Okay, so do your research on this first. It's all over TikTok. I got the idea actually from Joe Rogan, who I like a lot. I like almost all of his ideas, not all of them though. Yeah, so that's what I do. Another thing I do in my office, which definitely helps me from a biohacking perspective. Let me show you here. Let's go behind the scenes. Actually, let's do it this way. It'll be even more fun. What I do is I actually get between 20 and 40,000 steps a day on my elliptical trainer down here. It costs me, I think you can buy these things for $150 right now. Just go to Amazon, search for treadmill. Okay, it's cheap because there's no bars on the side. And so what I do is I get my steps in all day long, and I feel alive and refreshed to do this. Okay, so I got up this morning at 3:30. I've got a couple thousand, maybe 5,000 steps in already today. I feel great. And the reason I do this, I learned about this because when I was younger, when I was in school, the first hour of studying every single day was definitely the most productive. And then if I tried to cram for 10 hours at night, I would get nothing done. So if you're walking all day, you trick your brain into thinking that you just woke up. And if you treat this good, this works gooder. Yeah, so try it. I promise you it works. Other things I do from a biohacking perspective is I drink an entire thing, I try to at least, of water every single day. Okay. I take tons of vitamins. I make my own shakes. I was kind of running late today, so I just grabbed these two instead. I have just one of these essential greens here, and then one of these 100-calorie pillars thing. I'm on the keto diet as well, meaning I don't really eat much carbohydrates. Too much carbohydrate slows you down, and it helps you put on fat as well. Okay. And I have one coffee every day, and that's it. Okay. And I have bulletproof coffee. And what I put in this is out there. Okay. For hundreds of years, people have been putting a tablespoon of butter in their coffee or tea, and it gives you this insane ability, cognitive ability to absorb a lot of stuff and just be really passionate into what you're doing. It's kind of like that movie Limitless with Bradley Cooper. Yeah. I use a straw so my teeth don't get black. Yeah. Okay. All right. Next up, Bakul wrote, hey, Chris, can you please give me some labor costs to build 18 duplexes in Little Rock, Arkansas? Yeah, the best thing I recommend for you to do is I have a course on this. In my MBA degree program, I've got a real estate course. Okay. And what you do, and for those of you in my MBA program, you can download this from the last lecture for free. What you're going to do is in settings, you're going to enter in the address of the location. It works in every single country in the world. Then what you're going to do is you're going to value the property using 5 different valuation methodologies. The most important one for you is the cost approach, meaning how much would it cost you to recreate the duplexes on that plot of land. Yeah, and so with this course here, this elective, I ask you a gazillion questions. I teach you mortgages and all that stuff. I create an income statement, balance sheet, cash flow statement for you as well, all the ratios. And what happens is you get a 1-page executive summary right here, or a massive business plan that you can print out as well. I try to help you work smarter and not harder. And I'll show you what it looks like here just very quickly. I'll move on to the next question. So after you complete that, you get a 27-page business plan on the property, okay? And real estate is the best investment you'll ever make. My grandfather, God bless you, I miss you, he used to always say, Chrissy, buy land, they're not making it anymore. Okay. Next question is from Loic, which is a question regarding diversification in long-term investment. Sure. Is it risky to put all your money in the same ETF? For example, the VU, which is the S&P 500 ETF made by Vanguard, and they just cut their fees as well. Does diversification lead to less compound interest mathematically? Yeah, I would never put all your money into one ETF. In fact, I probably wouldn't put more than 10 to 20% of your portfolio in a low-risk ETF like the VU. I love the VU. It's in my portfolio as well. I think the average return on the S&P 500 in the next 20 years is going to be 15 to 20%. It won't be up every year. I promise you there will be big down years. The reason I'm so bullish is because a lot of companies are cutting expenses using AI right now, which drops right to the bottom line. And in terms, I wouldn't have probably more than 10%, probably 10% in any one particular ETF. And now if you want to do research on ETF, and don't anybody out there buy mutual funds that are a scam. Okay, because there's tons of hidden fees. Only buy ETFs if you want to get exposure to different sectors. So you can always go to etfdb.com, that's etfdatabase.com, and you can screen and look at any type of ETF here. You can look at crypto ETFs, any ETFs you want, ETFs by geography here. For example, if you want to invest in Brazil, you can look at ETFs here. EWZ is one of the ETFs for Brazil. So you can get access to Petrobras and just tons of other petroleum companies, et cetera, that they have there. Let me move on to the next question. Thank you. Okay, Secret Gamer wrote, hey, Chris, in your experience, what has been the most significant financial metric when observing stock price movements? Without a doubt, price to earnings. But what you want to do is you want to forecast your earnings 5 years out and value the company based on your PE target price based on your earnings per share estimates in 5 years. Yeah. And what happens is longer term, earnings and cash flow almost always usually converge as well. So a very simplistic way to forecast financial statements is just to look at the pro forma income statement. I can go to sec.gov and give you an example of that on any company right now if you want me to. Yeah. All right. Jojo wrote, can you spare $5,000 to pay rent? I'll return you a 2x following your financial advice. No, I'm so sorry. I can't do that. But if you want, maybe start a side hustle. I can help you with that. And I recommend everybody watching this call start to teach on Udemy, for example, and other websites. We all have something to teach, and it's passive income. It's fantastic. Even Ninja, for those of you who play Fortnite like my kids do. Ninja, my kids love that guy. So he started off actually before he made millions playing Fortnite. He started off actually teaching on Udemy on how to use Twitch. Everybody has something to teach. Everybody does. There's even one woman, Patricia Greenwald, who I know on Udemy. She was, poor thing, she was in an abusive marriage. Her husband beat her. It was terrible. She was living off of food stamps. She had the guts to leave that jerk. And, she was living off welfare. And she didn't know what to do with her life. And she thought, what do I enjoy doing? What am I passionate about? Well, she said, I love baking bread. And so she started creating courses on Udemy on how to bake sourdough bread, etc. And now she's killing it. She's worth a fortune right now. Just do a search on her if you want on Udemy. Anybody can teach, and it's very prophetic that she baked bread. It's kind of cool. All right. And the startup costs are nothing for teaching online. Yeah. Now, I signed an NDA years ago with Udemy, so I cannot talk about that company or the stock. Yeah. Okay. Next question is, how do you check any index option price in your option course? Yeah. So what you're going to want to do, and I'll see if I can open that dashboard very quickly. It is somewhat memory intensive. I have lots of spreadsheets open. So what you're going to want to do, I'll go right here. Where's it here? Options, options, options. Here it is here. Yeah. So what you're going to want to do is when you select the underlying investment, instead of selecting a single stock, what you're going to do is you're going to select an index instead, right? So let me see if I've got it in here. Okay, long short stocks. Yeah. So when you price the asset, what you're going to want to do is you're going to want to use an index like VU instead of actually. There's so much to this. Like right here, okay? You're going to want to select an index right here, and you can select here, let's see here, sector ETFs. You see here? And this here will provide you with a list of indexes here, right? So right here, for example, let me just pick a random one. This is the ICF, which is the iShares Cohen Steers Realty Majors Index Fund. Okay, so what you're going to do is you're going to select this here, okay? And that will populate the rest of the spreadsheet. And then you're going to click here in order to get the data directly from Yahoo Finance. If you have follow-up questions, let me know. Thank you. Okay. Next question is, can you please elaborate on price to cash flow and its significance? Thank you. Yeah. So when you look at an income statement, there are several line items that are non-cash, right? Like depreciation, for example. And the reason why depreciation is a beautiful thing is because it lowers how much cash you're going to pay. But when you depreciate an asset like a car, for example, you don't get money, right? It's a non-cash expense. So when you're analyzing financial statements, you have to add that back. The same thing with amortization and with stock options. When people are given stock options at a company, it's a non-cash expense. It costs you nothing to make options. You just give them away. So what you do is you're going to adjust the income statement by getting rid of non-cash crap, like depreciation, stock options, amortization, etc. Okay. Or what you can do is just create the cash flow statement, which is easy to do. If I give you an income statement and a balance sheet, the cash flow statement automatically gets created. Okay. And I've got something coming up for you guys. I'm releasing this to my MBA degree program students very soon. It's a financial statement analysis course where we use AI. Okay, so you enter in your ticker right here, and then you're going to enter in the prompt level, 8th grade, which is my maturity, hedge fund level, professional accounting level, whatever. And then you're going to answer tons of questions. And as with all my courses, or a lot of my courses, a massive write-up is created directly for you. You can use any AI product that will be coming soon. It will be free for my MBA degree program students. Yeah. Okay. Hey, Renveer, how are you, man? Renveer's from Mauritius. He's in my silver MBA program. My teeth are whiter because of him. He gave me a tip, which is to use baking powder. On my toothpaste. It's working better now. So thank you for that. Great to see you. Moving on to Brandon, who wrote, "Hey Chris, can you kindly discuss portfolio management procedures such as how often to reevaluate holdings, number of holdings, diversification, etc.? Thank you for your time." Absolutely. So I recommend that in every portfolio you have at least 20 stocks. And what that means is you're not allowed to have more than 5% of your money in any one particular stock. If it's an ETF, you might be able to make it 10% if it's a low-risk ETF like the VU. Then what you're going to do is you're going to do a detailed write-up on all 20 of these stocks before you put them in your portfolio. Okay, and you'll use my template here to create the detailed write-up so you can size the position and also value the company as well. Then what you're going to do from a maintenance perspective, and this is what professional investors do at hedge funds and mutual funds, is every 3 months, companies report earnings. So when they report earnings, you're going to go to sec.gov or investor relations for the company. You're going to get the financial statements and update your financial model. Okay. And you're going to listen to the quarterly earnings call, which is a webcast as well, to hear the Wall Street analyst questions from Goldman Sachs, Morgan Stanley, etc. And you're going to update your financial model based on that. Okay. If that makes your target price go down a lot after the earnings call, then you might want to cut your position. If it makes the valuation go way, way up, I mean, they had great earnings, you might want to increase your position size, but no more than 5%. So do you ever notice how when a company reports earnings, sometimes it drops 30% or it goes up 30%? Well, quite often it's because they missed earnings by 30% or they beat earnings by 30%. And so what's happening behind the scenes is when the market closes, and I once worked at a hedge fund where most of after hours trading was us. I used to update my financial models. If I notice that earnings are so awesome that it pushes up my earnings estimates in 5 years by 30%. Then what I do is I usually don't change my PE-based target price, but my earnings per share estimate in 5 years might go up 30%. And assuming there's no PE multiple expansion or contraction, my target price goes up by that amount. Yeah. Okay. And then Jojo wrote, "Come on, Chris, I really need that 5,000. My wife no longer wants to be a team player with my boss. If not, we'll wind up homeless." You know what, Jojo? If you want, send an email to support@haroonventures.com, and I'll gladly give my silver MBA degree program for free. And that way I can teach you how to fish and hopefully help you with a side hustle, etc. Yeah, thank you. And I'm so sorry you're going through that. Okay, moving on to Renveer, who wrote, "I bought NVIDIA calls when DeepSeek just launched. I bought some super cheap out of the money calls expiring end of March. Why could this be a wrong move coming from an expert perspective?" Yeah, so you probably know NVIDIA better than I do. I've owned it since the day pretty much that ChatGPT was released. I didn't sell, I actually added to my position. And please do your own research. So the reason that NVIDIA fell 17% one day, it lost $560 billion in market cap, the biggest one-day drop in history, market cap-wise for any company. The reason it dropped is because people saw DeepSeek and they thought, hey, this thing only cost $6 million to make. And ChatGPT cost $500 million to make. And DeepSeek, which is just as good, as ChatGPT. I use it a lot right now. DeepSeek used older generation NVIDIA GPUs from 2021 or so. So everybody freaked out. I'm not worried longer term. I think competition is a good thing for the consumer. Okay, it's great for us. Now, if DeepSeek did not exist, then I think that OpenAI, would raise their prices too much. Competition is a good thing for the consumer. Plus, I think, and this is just my opinion, that DeepSeek eventually will be illegal to use in the United States. And the reason I say that is because all the data likely resides in China. Okay, that's what I think. Now, this morning there was a news release that government employees will probably not be allowed to use DeepSeek. And this is how it starts. That's what happened with TikTok initially, and then there was a TikTok ban, which has been appealed. Yeah. So one thing I don't like about DeepSeek is this. I'll show you. I really don't like when there's not freedom of information. So watch this. What happened? I'll spell it wrong. What happened in Tiananmen Square in 1989? Okay. So let's see what it says here. I'm sorry, I can't answer that question. Okay. Well, what happened on 9/11? Okay. Tells you everything. Yeah. I like freedom of speech, okay? I'm not a fan of any sort of content filtering, etc., unless it's hateful stuff. Yeah. And those people that, I don't know if you guys saw so CNN back in 1989, they were lucky to have a crew, a camera crew in Tiananmen Square. And there was an uprising, and there's this one dude who's my hero, stood in front of a tank. It was the best thing. He wouldn't move, and the tank actually stopped. Yeah. Okay, I don't want to get too political here. I am a capitalist, and I despise communism. Okay. All right, give me 1 second here. I don't filter anything. I read everything. Okay, so hold on 1 second. Where was I? Manas from Calcutta, who's in my Silver MBA. How are you? Manas wrote, good morning, my dear mentor. Chris, please. Hope all is well. Happy birthday to you, young man. You're 27 now. Thank you. And thank you so much for that video that you posted on LinkedIn. That touched my heart. Thank you. Thank you. Especially the dad humor part. And then you wrote, tariffs are now paused for Canada and Mexico, but China, too, is hitting a 10% or more U.S. products. Will Apple suffer as China is the biggest market for them? Yeah, actually, with respect to with Foxconn, where they produce all the iPhones in China. Yeah, I think they will. I think that China will slap tariffs on that as well. So what China did, so Trump put 10% tariffs almost across the board on Chinese goods. And then what China did was they put tariffs on U.S. coal. I didn't realize we exported coal to China, as well as U.S. oil and other products as well. I think it's going to hurt China more than the United States in the long run. Now, when it comes to Donald Trump, and he says some pretty extreme things, we have to understand, and I'm going to try to be apolitical here, okay? I'm more of a libertarian. But when he negotiates, right, usually when two people negotiate, one person says, I want this, the other person says, I want this, they meet here. What Trump does is one person says this, he says, I want this, and then maybe they meet over here, right? So he, love him or hate him, he is probably the best negotiator for deals on the planet. Okay, so what he did was he put a lot of pressure on Canada and Mexico as well. At the last second, he delayed the tariffs for 30 days, but he got what he wanted. And what he got was 10,000 border troops paid for by Mexico and 10,000 border troops paid for by Canada, as well as Canada creating, fentanyl czar to stop the illegal importation of fentanyl that comes into the United States. And this is a serious issue. Millions of people have died, millions in the United States and globally as well from fentanyl use. It's disgusting. And for those of you that don't have a friend or a family member that's passed away yet from this, there's a good chance it can happen. It's happened to me as well. Yeah. So I respect the fact that he's trying to stop drugs. Of course, I'm not all for a trade war. And what happened was this morning, the Bank of England cut interest rates. And they did it because they're worried about a trade war and tariffs from the United States on England. Now, Donald Trump, he wants the markets to go up. And so the real judge of how he's doing as a president is going to be a movement in the markets. Now, what happened on Monday morning was the futures were down a lot because the tariffs were supposed to go into effect in Canada. And then he had a call with, Justin Trudeau, who is going to be stepping down soon as Prime Minister. Again, I'm not a fan of his liberal policies. And he basically said, okay, we'll hold off on tariffs for a month. And he might have done that. I don't know. He might have because he saw the market was in decline and the market recouped by the end of the day. So he's a master negotiator. Yeah. Okay. Ilka wrote here, follow-up question. What other tools do you use when evaluating stock prices? For example, TradingView, Guru Focus, MarketWatch. If so, how do you use them and what do you look for? I don't use any of those. All I do is I create a financial model, right? Let me show you the sources of my data. Okay. So if you use this product here, right? If you go to financial input sources, I give you all the sources here to use, like down here. I get financial data from Yahoo Finance, maybe prices historical from MarketWatch, but most importantly, I like to go to investor relations for the company, okay, and look at the stock market filings, okay, directly on sec.gov. That's it. That's what I use. So I use the annual report. I use the S1 if the company recently went public. And I use the 10Qs, meaning the quarterly reports, as well as all the 8Ks. And I listen to the company's analyst day if it's publicly disclosed and if there's a webcast for it. Please don't ever rely on anybody, including me, to tell you what to buy. Don't watch CNBC. Don't watch Mad Money. Do your own research. And I provide you with all the tools to do your own research as well. And the reason it's important to do your own research is because if you buy a stock without doing research and it goes down a lot, you're going to sell it. And Warren Buffett once said the New York Stock Exchange is the only store in the world where consumers sell stuff when it goes on sale. Think about that. Selling something you love because it's cheaper. It doesn't make any sense. Doesn't make any sense. And we've all made the cardinal sin of buying a stock that we love. It goes down, we panic, we get out, and now the stock is 10 times higher today. So buy and hold or buy and homework, hold forever. Do your research, think long term, because as Warren Buffett said, the longer the view, the wiser the intention. And you'll sleep better at night too. And that's why real estate is the best investment for a lot of people, because they're stockholders. It's too hard it's not liquid. You can't sell your house. I'm sure people would freak out if they could sell their house, if there's volatility. But because you're a stockholder, you make a killing in the long run with your house or your apartment. Buy land, they're not making it anymore. Okay. Oh, no. Ooh. Ilka wrote, rumor is GTA is delayed indefinitely. And you've got a laughing face, so hopefully that's not true. Yeah. To get my fix for GTA right now, I'm playing Mafia Definitive Edition Remastered. Yeah, it's okay. All right, moving on to Albert, who wrote, Chris, thanks for the Udemy options course. You're most welcome. What would you say is the next course for me to take? I have an HR degree. And I want to build wealth in the stock market for myself and my family. Thank you. So I have a program that's only available on my website. You can check it out if you want to. Just go to haroonmba.com and then scroll down and you can check out all of my MBA degree programs here. 30-day, 100% money back guarantee. Okay. All right. Jeffrey wrote, happy birthday. Greetings, Chris. Thank you. Appreciate it. The older I get, the better I was. And the second you're born, you're slowly dying every day. That was terrible dad humor. Sorry. Okay. And then Jojo, who asked for $5,000 before, said, okay, how about 4K? Deal if we can get the CEO clientele for my wife. She can't cook, but she likes, yeah. And then you wrote something else I can't talk about. Yeah. I will pray for you. Okay. All right. Lay wrote, happy birthday. Good question from Ray. I clicked the like button. Click the like button. Oh yeah, everybody, if you want, click the like button. It helps me a lot. Thank you. And for those of you that watch my Billions videos, the next one is going to be released tomorrow morning at 9 a.m. And then what I'm doing is I'm working very hard on doing Wall Street Part 2. And Donald Trump's actually in this, in a deleted scene. And then this is what I've been working on for ages, which is The Big Short. Yeah, a lot of fun. It's fun teaching that way. All right. Ilka wrote, Billions also had an episode on limitless type pill. They found out later it was bogus. Yeah, and I'm sure a lot of the stuff that I take, this is neuro. I'm sure there's placebo. Yeah. Moving on to Aflo, who wrote, what would you suggest for an employee post-IPO that now has stocks? Thoughts on diversification, or should they sit on it? How can they manage pulling funds and avoiding the harshest tax burden? Thanks. Yeah, it's a great question. So when I used to work in venture capital, the way it works is if you're an insider or a venture capital investor, you cannot sell on day one of the IPO. You have to wait 6 months until the IPO lockup is done. And that's why the stock usually goes down a lot. I would usually sell 90% plus. Like, I don't care if this company has a cure for cancer, because it's too large as a percentage of my liquid net worth. I would sell 6 months out always. Now, what a lot of people do is they have a financial advisor help them with options. Let me explain how this works. Okay, so let me get a prop here. All right. Let's say Nintendo just went public, okay? And you own a ton of shares in Nintendo, and you can't sell it. So what do? Well, you call a financial advisor and you tell them, I want to hedge this just in case Nintendo goes down. And what a financial advisor will do is they will tell you to buy puts or a more complex option structure so that if Nintendo goes down, the put goes up and you're protected. Now, a lot of people do this every single year for the stock they own forever, and they don't sell much of it. And the reason is because if they were to sell it, if it's up a lot, they pay a lot in taxes. Now, what Mark Cuban did with his company Broadcast.com that he sold to Yahoo back in 1998 or so for several $billion, he got a lot of Yahoo shares. So he created this zero-cost collar instrument, which I explained in my Billions videos. And basically what that did was it limited the upside if Yahoo went up a lot, but it also limited the downside. And selling part of that option paid for the other half of it. That's why it's called zero-cost collar. And because of that, Mark Cuban saved over $1 billion. It was a genius trade because after 9/11, the price of Yahoo and a lot of tech stocks collapsed. Yeah. All right. And if you can't transact in the underlying stock, you can ask the financial advisor to put together a basket of stocks that are similar to that company of yours that have a high correlation to it as well. Yeah. And if you're not sure which ones to use for competition, go to the S1 filing of your company that just went public, do a search for risks and the word competition to highlight the competing companies. All right, next up. All right, Aflo wrote, any suggestions on pulling from your 401k, meaning your retirement savings program, without losing your shirt on taxes? Always talk to your accountant first. And nobody should do their own accounting. Get an accountant. Not having an accountant is like doing surgery on yourself. There's a reason the accounting profession exists and the CPA designation exists, because the tax code changes all the time based on new politicians that are elected, etc. They'll be able to tell you. Yeah. Don't sell anything don't take money out of your 401k unless you absolutely need it. Yeah. Okay. And if all you did was you put, $22K per year in your 401k, which is a lot, we can't do it every year, I get it. But that's all you did. And all you did was invest in the VOO, ticker VOO, meaning the S&P 500 index. You'll probably have over $1 million in 20 years. If your wife did it, you'd have over $2 million in 20 years. If you have kids and you put money into an educational savings account, which is like a 401k, but the max is like 15K, then in 18 years when they go to college, you'd have 700K per kid. So that's 2.1 million plus the $2 million you have in your 401k. You're worth over $4 million bucks, plus the appreciation on your house as well. Yeah. And I understand we can't do it every year. It's hard. All right. Next up, Sloan wrote, hey, Chris, can you explain game theory and how you applied it with your work in hedge funds? Also, any book recommendations on the topic? Yeah. There's nothing really great out there. You might want to do a search on Nicholas Taleb, read his book, Black Swan, and Blink, and all his other books, and it'll probably cover that, especially the book, Fooled by Randomness. So what game theory means is, imagine you and I are playing chess, okay? And instead of me thinking what you're going to do for the next move, I think what are you going to do for the next 3 moves. It's kind of like that. Now, when it comes to investing with game theory, you can think a couple moves ahead of the competition. Like what I used to do was when it was easy to short stocks into lockup expiration, I would use game theory and put on the short position because I knew that other funds would freak out once they saw insiders selling. So that's kind of an example of game theory. Okay. All right. And Yetzi, how are you? New student in my Gold MBA program. Great to see you. Thank you. My 10th annual Gold program started 2 weeks ago. Moving on to Tommy. Tommy wrote, how would you go about evaluating a buying versus leasing decision? Yeah, it's really complicated because leasing is kind of like renting and you do get tax breaks for it. What I would do is talk to your accountant. Yeah, you can also do lease to own, which means after you've done all the lease payments, you can buy the underlying asset. Yeah. And I'm going to explain this in a lot more detail in an upcoming course I'm releasing at the end of Q1 for my MBA students, where I talk about off-balance sheet analysis, how to read footnotes in the 10K, etc. Yeah. All right, next up, Secret Gamer wrote, I'm 18 right now and feel that my age is a drawback in the working world. Any tips to make yourself seem older, more mature? Yeah. Oof. Don't let ageism bother you at all, please. Like what you could do is when you're in an interview, and if they think you're too young, you can sell yourself differently by saying something along the lines of, with my generation, the way we communicate with each other is quite different. The TikTok generation, the YouTube generation, etc. And so I can help from a social media perspective understand a new demographic of customers. Now, whenever you have an interview, what I want you to do is this. I want you to go to ChatGPT or DeepSeek, okay? And when you're in ChatGPT, I want you to type in what your weaknesses are and ask it to turn to a strength. So watch this. I am interviewing and I am too young. Make that a strength in 1 or 2 sentences. You hit enter. So you enter in your So being younger means bringing a fresh perspective, adaptability, and a strong grasp of emerging technologies, like I mentioned, with social media. It also allows for faster learning curve and a willingness to challenge outdated processes, driving more innovation and efficiency. Okay, so whenever somebody has a weakness, or you think is a perceived weakness, you go to ChatGPT and say, hey, turn this weakness into a strength, and that will help you with your interviews. Okay. Moving on to Eddie Cuba, who wrote, you're the best. Thank you. Oh, thank you very much. I'll resend an email to the team. I'll give you 1% of my company. No, it's okay. Thanks. God bless you, though. Okay, moving on to Lana, who wrote, hi, Chris, and happy birthday. Thank you. You wrote, any thoughts whether someone should be debt-free before investing? If so, what are those late to the process or behind the 8 ball timing-wise? Thanks. Yeah, I don't recommend being debt-free if you have a mortgage. Okay, if you have a mortgage, it's okay to have debt, right? Just make sure you put down at least 20% on the mortgage so it doesn't impact your credit rating. And so you don't have to pay what's called PMI insurance, okay? And if you're in the United States, you can write off the interest on your mortgage. And that's why so many Americans never pay off their mortgage. I have a mortgage. I'm never going to pay it off, man. I get the interest tax deduction. And when you invest in real estate, you get massive depreciation deductions, so you pay less in tax. The richest people in this country own lots of real estate, so they don't pay as much in tax legally. For example, Donald Trump in 2016, during the televised debate against Hillary Clinton, Hillary said, hey, you're kind of bags, you're not paying taxes, something like that. And he said, well, I'm not paying much taxes because I get to use depreciation, which is in the confines of the law. And that's why I want all my students within 10 to 15 years to make more money from their residential investment properties than they do from their underlying base salary. Yeah, that's how you make incredible money longer term. That's the only debt I recommend. Okay, next up, Brandon wrote here. Give me 1 second, it jumps to me sometimes. Hey, Chris, thank you for taking the time to answer my question today. I appreciate your content. Thank you. Next up, Andy Wu wrote, I got your Udemy business class and I love it. Thank you. Thanks. Is that a green screen as your background or a big screen? Yeah. So the way I do it is because I have green eyes, I have green eyes, I can't use green screen. Right. And so a lot of people with Irish heritage, my grandmother's side and my mom's side had Irish heritage. They actually had to wear contacts during movies. So what I have is blue instead. And it's actually not a screen. I'll show you here. It's just blue light that shines up the back. You see right there. And then what I do is I superimpose green screen over it. So this is what Canada looks like today. Yeah. A little bit of Brooklyn Bridge in the house here too. Yeah. All right. All right. Secret Gamer wrote, going back to what you said about DeepSeek, do you think that Chinese products will perpetually be inferior to US products due to security concerns and perceptions? No, only if they're not allowed to use the latest generation chips. But what DeepSeek proved is that they can use older generation chips, not the latest technology, and still make a kick-ass product. Yeah. Okay. And then Manas wrote, DeepSeek is cool, but you cannot upload anything or ask it for analysis on anything like GPT. What are your thoughts? Yeah, it's still basic for now. It's kind of like when OpenAI was first, ChatGPT was first released a couple of years ago. They don't have a DALL-E or image processing part of it, and there's no Sora yet, but there will be eventually. I'm using Sora a lot right now to make videos. It is outstanding. And in my vlog that drops tomorrow morning at 9 a.m. Pacific time, my weekly or my Billions vlog, I use Sora a lot. Yeah, it's great. All right, Eileen, how are you? Eileen's one of the OGs. She graduated from my MBA program. She was in the first class last decade from Atlanta. Great to see you. You wrote, good morning, enjoying this webcast today. Thank you. And I hope to see you this September for the 3-day alumni event for all gold, platinum, and diamond students here in the Bay Area. Yeah. And then Cato wrote, love your, what's up, love your stuff. Thank you. And then you wrote, I scheduled time with you on Wednesday. Thank you. Moving on to Manas, who wrote, India will be cutting rates tomorrow. First time in 5 years. Yes, 5 years. The Sensex is down 12%. Since Trump was elected, everything is overvalued here, like everything, too much optimism. Yeah. I haven't really paid very close attention to that, although I am bullish longer term on India as the world's largest democracy, especially Satyam, Infosys, Wipro, anything IT services related. I love it. All right, next up, Big Mike wrote, is an MBA worth it? So when I did my MBA and I graduated in the year 2000 from Columbia University, I was really frustrated because when I graduated, they didn't teach us the most important concepts in business. They don't teach you how to sell. They don't teach you how to network. They don't teach you how to present, right? They don't teach you how to get a job. They don't teach you how to start a company. Ask anybody who graduated from a great business school, do you know how to start a company? They don't. They also don't teach you how to manage your own money. They teach you how to manage other people's money. And this was evident to me after 9/11 when I bought my first apartment in New York City. Felt like hell buying it then, but that was the best time. I had to call my buddies who went to Harvard Business School in Columbia. I was like, dude, how does a mortgage work? And they were all like, I don't know. They didn't teach us that in school. So I had to call my mom and dad and ask, hey, how does a mortgage work? So practical skills are not taught in MBA schools. They're not relevant. It's not a professional degree as well. Yeah. And my MBA program is not accredited. It never will be. I'm not a degree mill. I teach you stuff that works. I don't want any government agency telling me what I can and cannot teach. Now, one reason to get an MBA is if you want to make a career change and you set up 100 informational meetings with people that work at companies you want to work at. And after all 100 meetings, you can't make that career change. Then maybe consider getting the MBA, which is a waste of money. It will cost you over $100 grand. Yeah. Your network is your net worth. Relationships are more important than product knowledge, though. All right. Next up, Manas wrote, too much hope, I think. We're in a bubble here in India. Auto sales are down. Inflation is high. The rupee is falling like a knife. What are your thoughts? Yeah. I don't know. I haven't heard Trump say anything about tariffs with respect to India. You know, I'm more optimistic longer term on the global economy. Good things are happening. Yeah, the only negative thing I would say about India right now is the government seems to be anti-AI, which might mean that there's less innovation coming out of Indian tech companies when it comes to AI. Yeah. Okay, moving on to Secret Gamer, who wrote, do you ever read the long-ass fine print before income statements to better understand the current situation of the market company beyond the numbers? Yes, I read everything. You have to read the annual report, meaning the 10K, and tons of footnotes in the 10K as well. And I'll teach you how to do that in an upcoming course coming from my MBA degree program students later on in Q1. Yeah, you have to read everything, especially the footnotes. Yeah. All right. Next up, George, how are you? George Goldman wrote, Chris, great YouTube lecture. Don't forget, I'm meeting with you tonight. Okay, you're on my calendar. Excellent. Looking forward to speaking with you and seeing your new book, and congratulations. Yeah. Okay. Moving on to Manas, who wrote, what are family offices and how to get in them like a newbie? If you had one, what would you do? Yeah. Okay, so family offices, basically it's a very rich family, and they have their own team of analysts that manages money for the family. That's it. Now, really rich people like Bill Gates have had their own family office to manage his own personal money for years, even though he's given a lot of weight to the Bill and Melinda Gates Foundation. Yeah, that's it. In terms of how to get into one, ask me during the silver call today, as I can go through your LinkedIn profile and teach you how to network to get informational meetings. Yeah. Okay. All right. Next up, Vinny wrote, The Big Short is your favorite yet. It's taken me a while to put this one together, but I'm going to explain it from scratch. It's going to be fun. It's going to be a long vlog. Yeah, I've been working on it for over a year now. Yeah. Moving on to Tommy J, who wrote, Can you please give a brief history of the stock market or point me to where I can get an understanding of the stock market? Yeah. So for thousands of years, there's always been a marketplace where people trade, vegetables, etc., or tulips in Holland back in the 1600s, right? So it's just a basic marketplace. The New York Stock Exchange still has a traditional trading floor, which is not really needed because everything is electronic. That's it. Yeah. If you want, go to Wikipedia and or to DeepSeek and say, give me a history in 10 sentences of stock markets. Yeah. Okay. Bernard Madoff, by the way, was chairman of the board of the NASDAQ for years. Crazy. Of course, he had the biggest Ponzi scheme in history. And he went to jail. He passed away. I always knew he was guilty because his name is Madoff. Because, he made off. Sorry. All right. Moving on to Manas, who wrote, Is crypto in a bubble? As always, because it's been up 2 years straight. Yeah. I do think that cryptos are probably in a bubble right now. Can't get more positive than it is right now because of Trump. So, whenever there's a material pullback, do your research and then never make cryptos more than 5% of your liquid net worth, and never make any one crypto more than 0.5% of your liquid net worth, because most of these are an absolute scam. I publicly disclosed the 4 cryptos I've owned forever. Do your research. Okay. Bitcoin, Litecoin, Ethereum, and Ripple. I set up a Bitcoin IRA 5 or 6 years ago. Yeah. And I think Bitcoin at some point, one day, it's not going to be a straight line, but it's going to be $1 million. I'm pretty confident of it. Longer term. Okay, do your research first, please. Thanks. All right. Moving on to Tommy, he wrote, Why is there a different stock market such as NASDAQ or New York Stock Exchange? Please provide high-level understanding of why these different markets exist. Yeah. So they compete with each other. Competition is a good thing for the consumer. NASDAQ traditionally was tech stocks, and New York Stock Exchange was everything else, right? And now the New York Stock Exchange is competing aggressively with NASDAQ by getting a lot of tech companies to list also on the New York Stock Exchange. All right, moving on to, give me a second here. All right, next up, Pranav wrote, why are markets so volatile? I mean, just the news of tariffs increase the S&P by almost 2%. Why are people so sensitive to news like this? So the market tends to discount what's going to happen in the future, right? So, for example, whenever war occurs, if we go back to 2003 when the United States invaded Iraq, what happened was the market was down leading up to it because everybody knew it was coming. And the second the first bomb drops, this is typical of most wars that are anticipated. The second the first bomb drops, the market bottoms. Okay, so it prices in all that stuff. Yeah. Now, in terms of volatility for stocks in general, 2 things are motivators for people, greed and fear, right? I want you to buy, as Warren Buffett said, be greedy when others are fearful and fearful when others are greedy. Be a contrarian. You'll make a killing in the long run. If you buy the same stock that everybody else loves, right? If you're chasing FOMO, chasing performance, you're not going to make as much money because there aren't that many incremental investors to push the stock higher. And so I have to quote, what my hockey stick here? Yeah. So I'm a proud Canadian. Okay. And Wayne Gretzky, who's the best hockey player ever, he was successful, he said humbly, not because he skates to where the puck is, because he skates to where the puck is going to be. And using that logic, I want you to be a contrarian, and I want you to buy stocks that people are going to like, not ones that everybody loves right now. Yeah. All right. All right, next question is, you say real estate is real, but what if 08 happens again someday? And will real estate give me 12 to 15% year over year like the S&P 500 or 10% like the Sensex? What are your thoughts? Yeah. So if you had bought real estate at the peak in 07, right before the 08 crash, you'd still be up huge today, right? You got to think long term with everything. Yeah. But the great thing about real estate is, you get the appreciation of the underlying house. You also get to pay less in taxes if it's a rental place because you get to depreciate. You get to write off the interest as well. And you get money from the renters. It's the best deal out there. And if you want more details on that, go to the last lecture of the MBA degree program. You're a silver student, yeah? And you can download and watch the real estate elective. Yeah. Moving on to Dane. Hey, Dane. Dane wrote, regarding the quality of Chinese products, I'm a landlord. Yesterday, I assembled a desk for one of my rooms. The desk was manufactured in China. Wonderful design, assembly instructions, Chinese product quality is great. Yeah, I have no complaints against Chinese products at all. Yeah. Moving on to Secret Gamer, who wrote, can you share some stocks and markets to pay attention to with this whole tariff fiasco? Appreciate it. Yeah, yeah. Oof. It's tough because if you look at countries that are natural resource rich, like Brazil, Canada, and Australia, if commodities are going to get hit, those three countries' markets will go down and their currencies will go down as well. So if you think that that Trump is going to put massive tariffs on commodities coming from Canada, although we only have 10%, only going to have 10% on oil from there, that's going to hit that market hard. Yeah, yeah. But it's all country specific, right? Because I don't think that Trump is going to throw tariffs on every single damn product there is from Mexico as well as Canada, and none of us know. In 30 days from now, when the moratorium is done, what he's gonna tax. I just don't know at this point. Yeah. All right. And then, yeah. All right. Okay. So Vusin likes my Madoff comment. Thank you. Okay, Photon wrote, hey, Chris, when you sell iron condors, is there any specific delta do you sell, or does it just depend on specifically your strategy is? Yeah, for those who are not familiar with iron condors, it's a 4-option strategy, which I teach my option elective. I'll show you right here. Yeah, so let's go here to option dashboard. Let's go here to option strategies. Yeah, so right here, you can either buy or sell an iron condor, and there's 4 different options, instruments. It all depends. And as you go through the curriculum, you can look at the 5 Greek variables in order to better understand if an iron condor is mispriced or not. I don't recommend that people transact in these things, though, because it means that you're actually underwriting, meaning selling an option. And what's deadly about that is if you underwrite or sell an option, you can lose a lot more money than what you invested if you get randomly assigned. Yeah, just be very careful with that, please. Thank you. Okay. Secret Gamer wrote, was there a time when everyone else was wrong, but you were right? Yeah, it was. I mean, the fall of 2008, my hedge fund, the whole world was within 24 hours of bank machines not working. I went massively short. The market did exceptionally well. For example, in October of 08, markets were down 20 or 30%. I was up, 3-4% or something. But it felt bad. It felt wrong. And it's one of the reasons I got out of the hedge fund industry to go to venture capital. It felt bad for me because I would come in every day to work hoping that banks would go bankrupt, which is indirectly me thinking, I hope people lose their jobs and their houses. It felt dirty. It felt wrong to me. Yeah. And the subject of tomorrow morning's vlog that's going to drop at 9 a.m. Is in a recent episode in Billions, actually not recent, season 3, episode 4. Billions, Axelrod's firm made a fortune from shorting a SpaceX rival because the CEO of that company died in a rocket. And the employees, for the most part, were really happy about that, which made me sick. So that's when I was right and, other people were wrong, but it didn't feel good. Yeah. All right. All right. George wrote, Chris, discuss if you could discuss YouTube revenue. Is it worth it? No, never. And I don't take any sponsorships on my channels anymore either. But it's just not worth it unless you have like 10 million viewers. I'll show you how much money I make from YouTube. It's not as much as you think, right? So let me go here. First of all, go to my website so I can go to YouTube. I'll show you in real time here. Yeah, it's not much. So let me go here to YouTube Studio. And I'll show you analytics. Let's see if it's here. Yeah, it's coming. Yeah. So my revenue this month so far, I mean, you can't really survive on this, right? It's this amount here. You're not going to make a killing based on this. Yeah. So I mean, you really have to have like 10 million subscribers to be able to make money. Yeah. So anyway. I don't do it for the money. All right. All right, next up, Jay wrote, can you explain or give a crash course about bonds? I understand there's an inverse relationship with yields. Can you explain it like I'm 6? Yeah, absolutely, because that's my maturity. Okay. All right. So I'm the Federal Reserve. Okay. I'm the U.S. government, the Federal Reserve. And you're all consumers and investors. What I'm going to do is I'm going to sell this to you. Okay. Here's a bond. Okay. You're going to buy this. I'm going to take your money, okay? And this will go up in value over time. So I'm going to take your money, okay? The reason I did that is because I want interest rates to go up. What? Well, the supply of money is now lower. I took a lot of out of circulation. I'm the government, or I'm the Federal Reserve. And whenever the supply of anything goes down, interest rates go up, right? So for example, if there's a big drought with avocados and supply of avocados goes down, the price is going to go up. By the same token, the amount of money I took out of circulation, right? So there's less money out there. Therefore, the price of money goes up, meaning interest rates go up. Now, if I want interest rates to go down, what I do as the government is I buy this bond back from you. I just threw tons more money out there. And because the supply of money increased, interest rates went down, which is exactly what the Bank of England did this morning when they cut interest rates with the pound sterling. That's it. But the best way to think of bonds is it's debt, right? So the United States government, during World War II, they sold tons of these things so that they could, build tanks and bombs and destroy the Nazis and all that stuff. So what they did was they sold it to the American consumer, buy war bonds. It was a patriotic thing. American government got the money. They took some of it out of circulation, but they used some of it to defend freedom, build tanks, etc. Now, big companies can also issue bonds as well, right? But the interest rate has got to be higher than the U.S. government because the last company on the planet to go bankrupt would be the U.S. government. And people tend to analyze what's called the yield curve by going to treasury.gov. I can talk about that in detail if you want me to. Now, when it comes to interest rates for you, if you want to get a loan, like a mortgage, that's kind of like a bond, right? But the interest rates are going to be higher than the United States government and a lot of AAA rated companies because the likelihood that we default on our mortgage is higher than Apple or Coca-Cola defaulting on their debt. So that explains it in a nutshell. And there's different types of bonds too, right? There's federal, there's state provincial, there's also municipal bonds, which are called munis. And with municipal bonds, usually you don't pay taxes, right? Certain types of taxes. But the problem is you can lose all your money with munis. So years ago, I think it was like 10, 15 years ago, Orange County, which is a region in Southern California, which is very wealthy, they went bankrupt. And so all the municipal bond holders lost their shirts. And if you want, go to my YouTube channel and search for bonds. I did a very long video where I explained Sandicott bonds, which is from one of the episodes of Billions. It's a loan. All right. Next up, Mac wrote, hey, Chris, hey. I'm watching a company that's going through major restructuring. The financials are pretty good with 98% institutional ownership. Would this be considered a good sign or setting short? Yeah, it all depends. Most turnarounds don't work, but I can't just answer that. You'd have to complete the entire 100-step program. You're in my Gold MBA program. So download this and do due diligence on the entire company. And that might help you understand if it's a good investment or not. And regardless of how good you think the investment is, you cannot make it more than 5% of your portfolio. Yeah. And institutional ownership doesn't mean anything to me. Yeah. Okay. Seeker Gamer wrote, war is only good if you win. Sun Tzu, The Art of War. And my favorite quote from Sun Tzu is, every battle is won before it's been fought. Yeah. Which Gordon Gekko quoted in the movie Wall Street 8 million years ago. Okay. So Manas wrote, crypto options. Does elite call or put make sense? Yeah. So it all depends. A call means you pay a small amount of money, relatively speaking. And if the underlying asset, meaning the stock crypto goes up, you make a lot. If it goes down, all you lose is this. A put is the opposite. If the crypto or stock goes down, you make a lot. If it goes up, you lose this. When you say the word leap, it means a long-term call or a long-term put, meaning 2-3 years out. So I can't tell you, if it makes sense to buy a put or a call on a crypto. You'd have to do your own research. Yeah. And you'll see also, Manas, that in the Silver MBA, in the EMS track, Economics Management and Strategy, I teach you, how to do due diligence on cryptocurrencies. Yeah. All right. Next question. Tofig wrote, "Can I pay for the MBA program with crypto?" No, I'm so sorry. Yeah. The payment engine we use, you can use credit cards or PayPal, I think, and maybe Stripe. Yeah. Okay. Next question is, will Temu replace Amazon or at least take stake? Also, will Trump really want oil down per OPEC's request to deter Russia? Yeah. So Trump's philosophy is drill, baby, drill. And what that means is allow for more drilling in the United States. If you allow for more drilling in the United States, supply of oil goes up, therefore price goes down. And pretty much every single product, most products are made using oil, so it's very deflationary, right? So it'll solve this inflation crisis, right? So plastic products, metal products, they all use a ton of oil. Yeah. And obviously automotive and industrial stuff. Yeah. Okay. And then George Goldman wrote, "Where can I find information on creating a flex option? I'm not an options principal." So what I recommend doing is in the MBA curriculum, go to FA44 for more details on that. That's Finance and Accounting Semester 4, Class 4. Yeah. And you're a platinum member. Yeah. Okay. Manas wrote, "Thank you for everything, my mentor. God bless your family forever, ever. See you in under an hour in the house of Harun Habibi." Thank you. And thank you for the emojis. God bless you. Namaste. Moving on to Secret Gamer, who wrote, "Haha, maybe they should make another Big Short movie about you." Yeah, I don't know. This is actually part 2. So Michael Lewis wrote this book, and it's actually Liar's Poker Part 2. So back in 87, I read a book called Liar's Poker. And for those of you who want to learn more about bond trading, it's about Solomon Brothers. Read it. And this is Liar's Poker Part 2, right? There's so much more to this than just the movie. Yeah. Okay. Arun wrote, "Chris, what do you think about Trump's strategy, and how do you feel about Trump?" Yeah. So as I mentioned earlier, love or hate Trump, we can all be intellectually honest and understand that he is very good at getting deals done, right? He's extreme. Like he tried extreme tariffs on Canada, and Mexico, 25%. And then he kind of got what he wanted, which was 10,000 troops at the border in Canada and Mexico, paid for by Canada and Mexico respectively, in order to stop fentanyl so that Americans wouldn't die. And I respect him for that. Yeah. Okay. But he's a hell of a negotiator, that's for sure. Okay. Jay wrote, "Can you explain nominal yield, current yield, and yield to maturity for bonds? Why does the hierarchy change if it's a callable bond versus a put bond?" Yeah, I can't really talk about put bonds or shorting bonds or negative instruments when it comes to that. But generally speaking, yield to maturity means, I don't know, if a bond is at $10 today, and it matures at, I don't know, $110, then the yield to maturity, if it's 1 year, is 10%. In terms of understanding current yield and nominal yield and all that stuff, the best thing I can do is explain the yield curve very quickly. And this impacts everybody's life on this call. So what we're going to do is this. We're going to go to treasury.gov together, okay? And we go to data, okay? And then we go to yield curve right here. And we look at the current yield curve, right? So I'll just use January 1st. Actually, no, I'll go down here. Let me go to February. Give me 1 second. I can explain this. And this impacts everybody on this call's life more than you know. Okay, it's important to understand this. Okay, so short-term rates, as set by the United States government when they sell treasuries, right, is 4.35%. Okay, that's 1 month. Well, the 30-year is 4.64%. Right. So, and the 30-year is set by the marketplace, what they think the market's going to look like in 30 years. And whenever you see rates higher in the future than they are today, that's a healthy yield curve, because the market is saying, oh, the economy is going to be better in the future, and therefore the government's going to have to increase interest rates. We saw an inverted yield curve under Sleepy Joe last year. So people are basically saying, I'm confident in the economy. because of certain politicians, whatever. Yeah. And this is important for everybody to understand because this 30-year rate here impacts you. If you get a mortgage, like if you want to get a mortgage, it's around 7% right now. But if rates went up to 10%, your mortgage, your 30-year mortgage, if it's not fixed, would probably go up to, 14%. So this impacts all of us. And this is why we're always on pins and needles whenever the Federal Reserve has any comment about inflation and interest rates. Yeah. Eduardo wrote, is there any way to figure out how much your stock options are worth after a funding round? The CEO isn't giving any information about its new valuation or round multiplier. Yeah. So it all depends. If you're not allowed to sell those options, unless the board lets you, then I would assume the options really aren't worth very much, right? That's what I would assume. Now, in order to sell your options, your stock options to somebody else, you have to get board approval, and that's called ROFR, which means right of first refusal. Right, so when I bought Palantir shares years ago, when it was a private company, we got permission from Peter Thiel and Founders Fund from the board to be able to invest in Palantir. A lot of people work for private companies and they can't sell their shares, and so that there's golden handcuffs. They're stuck in that company for years. And most companies, 99% of companies, private companies, when you get stock options, they're never going to be worth anything. For every Google out there, there's a gazillion other search companies that went to zero. I'm exaggerating with 99%, but just always be careful. And if you plan to work at a startup and you're negotiating compensation, if they say we're going to either give you more options or more cash, always take more cash, right? Say you want some options so you don't look like a flight risk, but you want to take more cash because in the unlikely event, I don't mean to be pessimistic, but I'm a realist. In the unlikely event that the company does extraordinarily well, they're going to give you more shares anyway and goes public. Right? They're going to keep giving you shares and it costs them nothing. It's a non-cash expense for them to create stock options for you. Yeah. Okay. Tommy wrote, what's your take on Michael Lewis mentioning years ago that investing or the markets are rigged? Yeah. Now, he's a great journalist. I respect his opinion. I don't agree with him. But that was probably around the time of the flash crash. And he wrote, I work for a certain hedge fund. I can't go there. Okay. Ya wrote, hello, Chris and everyone. Good to see you. Yeah, I graduated from my gold program last year, I think. Yeah. Ilka wrote, what do you think about sovereign wealth funds? Yeah. So a lot of countries like Singapore, for example, they have a large amount of cash that it's kind of like a stock portfolio or a portfolio of investments for the country. It's a great thing. It's good to save. The United States has never had that until now. So what's happening right now is Donald Trump is talking about creating a sovereign wealth fund for the United States. And my gut is if TikTok is not banned, TikTok will be one of those investments. Yeah. All right. And then Jay wrote, thanks, Chris. You're the man. Thank you. I'm getting my SIE and bonds are really turning my head around. Greg, thank you. Thank you. And just use ChatGPT. What I usually do in ChatGPT is I type this, right? Explain bonds to somebody in grade 8, use a basketball reference, meaning Michael Jordan and LeBron James, although we do know that Michael Jordan is way better. My kids say LeBron like they have no idea. Yeah. Okay, good. All right, I'm going to take a very, very short break, guys. Please keep your questions coming. I'll be right back. Here's a short video here. Thanks. Welcome to MHS. Congratulations! MHS stands for Morgan Haroun Sachs, which is the world's #1 pretend finance company. Come with me. You will go through our Financial Analyst Training Program Bootcamp. Here you will learn a lot about finance and investing with no theory. You will rotate through the many divisions of our firm, and we will discuss how to excel in 14 different financial analyst roles. I will also help you understand which finance role you're most passionate about, and how to get hired and promoted in the industry. You will deal with the employees and clients of our firm in edutaining, meaning entertaining and educational interactive case studies, including how an IPO works, how to manage risk, and how to manage a portfolio. You will create incredible investment research reports that will impress the heck out of anyone in the finance industry. This course is for anyone who wants to be a financial analyst or a better investor, stock picker, portfolio manager, and more. No prior experience is necessary. It includes a comprehensive Excel template to help guide you through our training program. In addition, I will teach you Excel skills so you can model financial statements and value companies from scratch. This course is based on my many years of experience. I'm an MBA graduate from Columbia University. I've gone through the Global New Hire Financial Analyst Training Program at Goldman Sachs in New York, London, and Tokyo. I've worked for top hedge funds, and I even started my own hedge fund and venture capital firms. This course is more than 22 hours long. This is the most thorough financial analyst and investing course available on the market. The student reviews have been amazing. Welcome to the Morgan Haroon Sachs training program. This will be a lot of fun. I'll see you in the morning. All right, thank you very much for allowing me to take a quick break there. Okay, next question is, Chris, what are your thoughts on opening a retail luxury watch store? I really enjoy horology, but skeptical on retail. Yeah. So I don't know. I probably wouldn't do it, but make sure to write a complete business plan first, okay? And I have a template for you that you can use to write a business plan, which is right here. It's part of the Venture Capital Bootcamp part of the MBA degree program. You answer questions about the management team, the product, the service, competition, go-to-market strategy, etc. I think the problem you're going to find is once you start creating the financials, you realize that the margins are very, very low for you. Yeah. And the reason is because you're competing with, I mean, it's hard to compete with Tiffany's or even Amazon when you're buying anything. And retail, you got razor thin margins. And retail is such a tough business, man, that's why Black Friday exists in the United States. The reason it's called Black Friday is because companies are in the red, meaning they're losing money all year long in retail until like the third or fourth week of November. So they only make money for about 5 weeks of the year. It's not worth it. Yeah, before you do it, write a full business plan first to see how you can differentiate yourself. Yeah. Okay. All right. Next up, Aniruddha wrote, "Hey Chris, in the Indian markets, what do you think of Treasury bonds and NPS?" I don't have a strong opinion on treasuries in India. Sorry. Secret Gamer wrote, I think the wealth fund is a great idea. Yeah, the sovereign wealth fund. I do too, actually. It makes a lot of sense. Yeah. I don't agree with everything Trump does, but I think that makes sense. Yeah. And then Vinny wrote, "What a sick commercial. Thank you." And credit goes to Adad Warda, who made that and like 10 of my other promotional trailers too. He's great. Yeah. Vinny then wrote, "I'm looking to sign up for your Silver MBA program today. Thank you. Awaiting details from your team on wiring FX change since I'm in Canada, LL." Yeah, we don't we don't take wiring money. Sorry. The only way to pay for my products is with credit cards at checkout. Yeah, so you can always go to just go to learn.haroonventures.com and then select the product, and then at checkout you'll see the payment terms we take. You can pay, everything's 30-day money back guarantee. You can pay one-time fee, or you can do 12 payments. Yeah. Thank you. All right. Next question I've got is Secret Gamer wrote, "Probably not in your wheelhouse, but do you have any ideas on stuff that I can do to boost my portfolio?" Hold on a second. Boost my portfolio when applying to university for finance. So I would say do your own research. Right? Use that 100-step research process I provide you with. Always do your own research. Never rely on anybody else. Use risk management as well, meaning have at least 20 positions in your portfolio. So when you do due diligence on a company, and I developed this, having worked at Goldman, top hedge funds, venture capital over the years. This is for my MBA students, but you start off with qualitative research. Okay, like the management team, you always start with company history, product, services, etc. There's 100 steps, and I ask you 730 questions, and all this gets put into a report for you. After you do the qualitative research, then you move on to quantitative research, like the size of the total addressable market. Never invest in a company where the TAM, total addressable market, isn't at least $20 billion. analyze market share, market growth, geographic exposure, etc. Then you move on to financial research, okay? And then you're going to build out your financial model. I teach you all this stuff from scratch in the MBA degree program. You're going to value the company as well, look at auditor red flags, etc. And what comes out of this is a one-pager like this here. And you can always print this out. A lot of my students actually print the one-pager out, put it on the back of their resume from when they do informational meetings. What you can also do is there's a detailed report, which is 100, 150 pages here. Okay. And then also a dashboard that comes out of this as well. And every single tab has got a YouTube video that you can click on as well in the 26th row. Okay. Give me 1 second to get back to Wirecast. Okay. And then center of the board donated $20. Thank you so much for that. I appreciate it. And with donations and a lot of the money that I make, and the reason I do what I do is not for money. The reason I do what I do is I'm trying to build 1,000 schools in Africa. Okay. And the cost per school might be $100,000. So that means $100 million. It's cray, I know. But let me actually show it to you, the schools and why I do what I do. I'm working on the second one right now. Let's go to Aboot. Yeah. So I'm currently building a school in Kenya. It's a school for girls through my students in Kenya. And there's their father. I met with him recently. This guy's awesome. So he actually got a scholarship to go to University of Colorado years ago in the 60s. And he saw Dr. Martin Luther King's I Have a Dream speech live. Udemy has been a great supporter, as well as my friend at Marvell. And then if you scroll down, you'll see here that the school that we built, that we finished in Magoo a couple of years ago. Yeah, it's got solar, totally self-sufficient as well. Here's the kids. I love them. It's tiring getting water, man. These kids, they do it in bare feet. Yeah, that's my son Matthew on the left. That's I think one of the ministers of education on the left when we opened it up here. But that's what it looks like. And that's my big head. So 100 students fit in the class. It's interesting because it's kind of morphing into a meeting center as well. And big shout out to Microsoft and IBM for donating laptops to us as well, although I paid for most of the school myself. Yeah. So anyway, that's what I do. And I did my weekly webcast from Rwanda. I think it was in 2023. Yeah. So much fun. All right, so center of the board. Again, thank you for the donation. Wrote, where do you teach about investing in bonds? And when you update the course, will silver members have access to the updates? Yeah, absolutely. Absolutely. So it's a one-time payment. You get all of my electives for free, like the real estate elective, which is only available for my MBA students. You get that. Just always go to the last lecture of your curriculum in order to get access to that. And we started the 10th one-year Gold and Platinum MBA program a couple weeks ago. If you guys want to join, just go to my website, whatever, check it out there. But let me show you how to tell where to access stuff in the curriculum. Okay, so I'm going to go here to where you log in to watch the courses. So you just search up here. So let's type bonds right here, okay? So if you type bonds here, then what you're going to do is you're going to select the program you're in, like platinum, gold. For you, it's silver, I think, down here. And then you're going to click here to go to the lecture where I teach you about bonds. Okay, so you'll click here. And then when you log in, you'll be able to start watching the lecture right here. Yeah. Yeah. Okay. Let's try a different angle here. I'll put the beach in the background here. Okay. All right. Next question I've got here is from ArrowX. Wrote, regarding a product I briefly shared in our members call, there's one feature that I believe is uniquely patentable. I have an upcoming investor call. Should I myself file a provisional patent? Absolutely. Absolutely. Now, the patent courts are really backed up. They always are. Like, it might take you a year or two to get it. And that's why you always see in infomercials and commercials patent pending, which is legally almost good enough as you already got the patent. Okay. Now, in terms of understanding if somebody already has a patent, trademark, copyright on your product, here's exactly what you can do. Okay. So you go to LegalZoom.com and hire them to help you. They're cheap, but I'm going to show you, we go right to the source, right? So you're going to go to uspto.gov, okay? And this is United States patent trade website and trademark website. So patent means you protect the way you do something, like a biotech drug or Amazon's, one-click shopping, whatever it is. It's the way to do things. Trademark means a brand name, right? So let me go here to search the trademark database, and I'll show you how this works. So before you start a company, you always want to search to see if the trademark is already been done, right? So for example, I search here on trademark. Here I've got Haroon Education Ventures, my logo and all that stuff. That's supposed to be an arrow pointing up. I got the idea from FedEx. And other stuff. You'll see all these are live. There's one that's dead, and I want to explain why. Okay, so this one here is dead. And the reason is, years ago, I tried to file a trademark so I would own the complete YouTube course. And it got rejected. And it got rejected by Google, rightly so. Because whenever you file these things, there's like a 30-day window where the whole world can look at it and contest it. And Google said to me, their lawyers emailed my lawyers. They said, go ahead and keep that name. That's okay, and publish the course as well. But you can't copyright or trademark, I should say, the word YouTube because Google owns that. Yeah. And by the way, China just filed an antitrust lawsuit against Google because Google owns the two biggest search engines in the world, Google and YouTube. So this here is a trademark as well as patents. If you want to file a copyright, right? So if you write code, you can copyright code. If you write music, you can copyright music as well. And if you make videos like I do, you can copyright that. So the way to do that is you go to copyright.gov. I recommend going to LegalZoom.com and hiring somebody to do that. It's kind of an antiquated system. The way it works is you can do it for less than $100. You copyright stuff. You have to mail in like a USB with all your videos and stuff on it. Let me see if I can find here. Search copyright records right here. And you might want to do this before you register a company name, like the web address, etc. So if I type here Haroon and the Caesars, okay, there's tons of them, that's right. Salman Rushdie. Okay, but no relation to me. I don't want to be affiliated with that guy. All right, so Haroon here. And right here, so for example, my entire MBA program right here, I copyrighted all of it so nobody can copy it, okay? As well as all my courses as well. And it goes on and on. I've done tons and tons of these over the years, right? So this one I did back last decade when I launched the MBA program. And I registered like a motion picture because it's online video stuff. Yeah. So that's how it's done. Now, I recommend going to LegalZoom.com, okay? And I don't get any brownie points for mentioning them. I use them because they're cheap. And then what you can do is you select business here. Let me just close out that box. And then you say, trademark registration, patent, copyright, etc. And then you can hire somebody here to do it for you. It starts at $199 plus filing fees. Probably costs you a couple $100 all in. Yeah. Okay. And when I used to do research on publicly traded companies, and I do it now sometimes too, you can always do a search on copyrights, trademarks, and patents for any company like Microsoft. And you can find out what they're working on for the next generation product. So for example, the worst kept secret in all of tech was the fact that Apple, at the beginning of last year, a year ago, was going to launch, a VR product. They filed 5,000 patents on that stuff over the years. That's why everybody knew about it. It's a great way to do investment research on a company. Or if you're going to interview with a company, you can always find out, what their long-term corporate strategy is by going to see what patents they filed or trademarks or copyrights. Okay. All right. Next up, J. Rowe, and also Arrow. When you go to this investor meeting for your company, if you have an amazing company, you're probably going to get questions about barriers to entry. In which case you can say, well, we filed a patent. It's patent pending. Yeah. But rely on your lawyer, not me, for that, please. Okay. All right. Next up, Jay wrote, what licenses do you recommend to somebody who wants to get into institutional trading Is it possible for someone who doesn't have a BA or MBA to get into institutional trading? Yeah, it is. It's all about networking, right? So, for example, Sidney Weinberg, who was the CEO for a decade or two of Goldman Sachs, he had a high school degree and he started in the mailroom. You can certainly do it just by networking like crazy. And if you take my MBA degree program, in the first couple lectures, I teach you how to network on steroids so you can get the job of your dreams. Now, every time you see a job opening online, you literally have a 1 in 250 chance to get in the job. And the person that ultimately gets hired knows somebody at the company. So you have to network. And my success rate, humbly, that's what a Canadian says before they brag. My success rate, humbly, on getting meetings with people I've never met before, leveraging LinkedIn and my methodology, has always been 95%. And I don't say that to impress upon you. I say it rather to impress upon you the fact that you can do it if you follow my methodology. And I always tell my students in my MBA program with love in my heart, I can take you to the water, but I can't force you to drink. Yeah. You have to practice, practice, practice. As Tony Robbins says, repetition is the mother of all skill. Yeah. Okay. All right, moving on to Mr. Mask. That was Cameron Diaz's first movie, The Mask, right? With Jim Carrey 8 million years ago. And by the way, I know every line from the movie Dumb and Dumber. Yeah. Mr. Mask wrote, "Hey, Chris, is it a good idea to invest $100 each month in the S&P for the next 20 years? Yeah, absolutely. Absolutely. Let me show you the time value of money. And this is going to blow you away. Okay. So let me go over here and let's do an exercise together. Okay, let me go here. All right. So here's what we're going to do. Let's pretend that you spend $100 every month on rent. Okay. Over 50 years. Okay. And instead of $100 every month on rent, let's pretend, because I'm trying to show you why it makes sense to buy a place, that all you did was you invest $100 a month in the S&P. Okay. And let's say that you're really optimistic and you think the S&P is going to be up 15% per year on average. So watch this. 50 years times 12 for months times this rent example. Assume that $100 up there is S&P 500 stuff you're putting in the S&P 500. I mean, if we do that, then right here, that's $60,000, right? Assuming that it doesn't go up in value. Now, again, $100 a month for 12 months times 50 years is 60 grand. Here's my question for all of you, okay? I want you guys to tell me how much that 60 grand would be worth if it went up 15% every year. Okay, I want a couple people to enter in, or at least tell me what you think it's going to be worth. Don't do any math. Don't ask ChatGPT, please. Yeah. And then I'm going to blow you away with how much that is worth. Okay. So I want a couple people to enter in how much they think 60 grand, meaning $100 a month for 12 months or 50 years, is worth at a return of 15%. Okay. You think it's 100 grand? Maybe 200 grand? 300 grand? Somebody's got to enter in a number before I move on. Okay. All right, good. Vusen Consulting wrote, I got to count these zeros. 1, 2, 3, 4, 5, 6. $30 million. Okay, let's see if you're right. Let me go down here. Survey says, okay, $13 or $14 million, right? And there's the formula right there if you guys are interested. Yeah, 2 million. Yeah. It's a lot of money, eh? It's a lot of money. All right. And the reason I was showing this is I was trying to explain if you were to buy a place instead of renting a place, how much it would be worth. So just for fun, let's say that you spend $2,500 each month on rent, okay? $2,500 each month on rent for, 35 years, okay? And let's say that the property, instead of renting, you buy a place and the property goes up, 10% per year, okay? So 35 years times 12 months times 2,500 is $1 million. But with 10% return, what would that be worth? It'd be worth $10 million, right? Just for fun, let's go 50 years and then let's go 15%, right? And I know it's not going to be up that much every year, but just for fun, see what it's worth. $344 million. $344 million. Here's, if you want to see the formula on that, I'll double click right here, okay? And I'll just go up here, okay? Pretty amazing, huh? So yes, saving $100 a month is going to make you worth a fortune in the long run. It all adds up. It all adds up. And that might help you, when you're thinking about buying the next version of Beats earphones for, headphones for $300. You're like, well, dude, that $300 would be worth 30 or 40 grand in 50 years. Do you really want to spend 50 grand on earphones? And it also might help you, before you spend money on alcohol. You're like, dude, if I just cut alcohol out of my diet, which you should, I don't drink. I don't drink anymore, but I don't drink any less. But if you cut alcohol or cigarettes, whatever it is, whatever your vice is, out of your diet, get rid of that bad habit. You're worth a fortune in the long run. It all adds up. And I want you all to live below your means. And the way I want it to be set up for all of you, and I say it with love in my heart as always, is I want as much money to come out of your bank account every month to go into the S&P 500 or your retirement savings account. I want more than you think you can afford. And that's going to force you to live below your means. Yeah. You'll thank me in 50 years. Okay. All right. Next up, Christian wrote, hey, Chris, good to see you again. And I learned from you. Thank you. When one teaches to learn. And you wrote greetings from Uganda. Excellent. And that's one of the schools we're going to be building is in Uganda as well. Vital, who's from Rwanda, my student who I built the place there with, his brother lives with his family in Uganda. But we'll be doing that eventually. Next up will be after Kenya. We're doing Nigeria. And then Feds wrote, thank you for all you do, Chris. Very informative videos and live Q&A. Thank you. And we syndicate this also. A lot of people don't realize this. I'm not too promotional about this, but on every single podcast network there is. You can listen to this as well. I've been doing it for a couple 100 weeks. Yeah. Okay. And then Ilka wrote, what happened when you attempted to create a mobile app for your dashboards? Yeah. I create a mobile app for my 30-day challenge to a more productive, much happier you. It was so buggy and I just wasn't comfortable. I spent $5,000 on it and I pulled the plug. I just wasn't happy with it. Yeah. Didn't make sense. Okay. But I just spent $3,000 on Shopify. I've got a Shopify consultant who's helping me put my courses, my MBA program on YouTube. And the reason why I'm doing this through Shopify is the only way to sell anything, like a course, etc., on YouTube is to use Shopify. So we're working on that right now. By March 1st, it'll be online. Just rolling the dice, trying something different. It's fun. Okay. All right. But you fail fast, right? I don't mind taking risks. And, the biggest risk in your life is not taking risks. Fail fast. Failure is shameful. Or failure is not shameful. It's a badge of honor. As Michael Jordan said, I've failed over and over again in my life, and that's why I succeed. I got this from Etsy. Get one like this for your wall. Take a risk. Yeah. You only have to be right in business one time. And then Aniket wrote, is your course going to help me get a job? Absolutely, it can. I would check out my silver MBA degree program. There's no risk. It's $99 a month, 30-day money back guarantee. Or what you can do is you can pay $9.99 up front. But I help you with that. But as I said earlier today, with love in my heart, I can take you to the water, but I can't force you to drink. So you really have to practice the stuff I talk about. Let's get a nice fireplace in the background here. Kind of cheesy, but fun. Why not? I'm having fun. I always have fun. Okay. All right. Next up, Jimmy, who's in my MBA program, started on January 27th. Great to see you. Hope you're enjoying the fireplace here. You wrote, well done on the school projects for generations to come. God bless. Thank you. And God bless you more. Thank you. All right. Next up, Sergio, and I got to go in a couple minutes. For those of you in my silver MBA degree program, just go to the very first lecture of your curriculum, and then you can access the 1 hour Zoom call. You get access to a 1 hour Zoom call every week for life, even after you're done the program. Yeah. Okay. It's kind of a nice background. Look at the birds there. Okay. All right. Sergio wrote, how are you doing? I'm always good, thanks. I hope you're doing well. Okay. And I'm playing around. I put a blue light back here, just for fun, just kind of experimenting with something different. I got my I guess my 100,000 subscription, or pardon me, YouTube subscriber last week, and at the same time, Udemy sent me this as well. I'll show you. It's kind of fun. Okay. When you get 100,000 subscribers, they send you this. Well, they don't have to send it to you. So I'm glad I got it. Thank you, YouTube. Next one is gold, which is bigger. There's my big nose in the reflection there. Oh, it's huge. Look at that thing. It's massive. Oh my God. And then Udemy sent this as well to me, which I posted on LinkedIn. Alexa, shut up, please. Sorry. My kids are like, Dad, you can't treat sentient beings that way. But maybe I'm going to get canceled because of what I just said. I'm just kidding. So Udemy sent this, which is 1 million learner club. So everybody should teach on Udemy. It's a great company. All right. I do have to wrap up this call in a second. Let's see if I can bang out a couple more questions here. So Sergio wrote, I know you like to value companies using DCF, price earnings, and price to revenue. Do you always do 3, even when sometimes only 1 applies? Do the situatic, the company, I don't know that word, cool. The company maybe using a 3 could affect my valuation. Yeah, I to be intellectually honest, I tend to, my favorite one is price to earnings, because I assume that earnings and cash flow converge in the long run anyway. So my PE target longer term, my earnings estimate is like cash flow longer term. That's kind of like DCF sort of together. But I do use price to revenue as a sanity check as well. Price to revenue is a great way to value companies also when companies are not profitable. So for example, semiconductor companies, which are very cyclical, or cyclical companies like Caterpillar, they tend to lose a lot of money during recessions. So you can't value companies based on PE during recessions for them. For cyclical companies, you have to look at price to revenue, right? It's just easier to do it that way. Yeah. All right, let me go here and turn this blue light off. It's driving me cray-cray. Okay. All right. Let me get back to big mode, Chris. Life Reset. Oh, I like that. Wrote, hey, Chris, hope all's well. Eric Vander. Oh, Eric, great to see you. Eric is one of the OGs. He was in my first MBA program last decade. It is wonderful to see you, buddy. Wonderful to see you. And I miss you. And you were my first student in my MBA program to write a book. You published it in January of 2020. And it was called, I can't remember what it was, but you had a picture of Kathmandu on the cover. Yeah. It'll come to me, the name, because I've got the book here somewhere. Yeah. Now it's killing me. I can't remember. The older I got, the better I was. Yeah. All right. All right. So Eric wrote, great initiative in Kenya. Much admiration from here. Thank you. God bless you. It means a lot coming from you. And then you wrote, AI is taking off very fast. What big, more traditional corporates could be showcasing for this? Yeah. I do think that all large companies are embracing AI right now, especially customer service. I feel bad for customer service companies based in the Philippines, for example, right now, because they are starting to lose a lot of share to AI. And for me, my customer services, I pay $20 a month to an AI plugin through ChatGPT called chatbase.io, I think. Yeah. So a lot of companies are using artificial intelligence to cut expenses materially, but the real growth opportunity is to help grow revenues. And so I'm looking into that as well. I can't disclose which tech company in the Bay Area, but there's a very big tech company that created an AI version of me teaching in multiple languages. And dude, it's scary. Even English, I can't tell it's me. The only reason I can tell it's not me is because it can't do dad humor. Right. So, for example, if you meet me in real life, you'll see I'm a very tiny man. It's probably a good thing it doesn't do that. Yeah. All right. Excellent. Okay. And then Ilker wrote, over 50 years, 2 billion? No. Over 50 years, I think it was less than that. Let's see here. So if you invested $2,500 over 50 years at a return of 15%, it would be $344 million here. And then does it assume reinvesting dividends? I would say yes, only because 15% average return every year is not really realistic. There's going to be big down years for the S&P as well. Yeah. All right. Cool. All right, guys, I do have to wrap this up. For those of you in my silver program, I'll see you in a couple of minutes for our 1 hour weekly Zoom office hours. For those of you in my gold, platinum, and diamond program, you got 3 hours of office hours. If you want to learn more details on my program, go to haroonmba.com and you can just learn more about the programs right here. You can also schedule a call with me if you want to by clicking that blue button there in the corner with somebody on my team, I should say. And I'm going to end this week's webcast, like I always do, with a life-changing 1-minute video. It's an interview with Steve Jobs that I licensed from the Silicon Valley Historical Association. Alexa, stop, please. Thank you. God bless you guys, and I'll see you next week and every single week. Thank you.
When you grow up, you tend to get told that the world is the way it is, and your life is just to live your life inside the world, try not to bash into the walls too much, try to have a nice family life, have fun, save a little money. But life, that's a very limited life. Life can be much broader once you discover one simple fact, and that is everything around you that you call life was made up by people that were no smarter than you. And you can change it. You can influence it. You can build your own things that other people can use. And the minute that you understand that you can poke life and actually something will, if you push in, something will pop out the other side, that you can change it, you can mold it, that's maybe the most important thing, is to shake off this erroneous notion that life is there and you're just going to live in it, versus embrace it, change it, improve it, make your mark upon it. I think that's very important. And however you learn that, once you learn it, you'll want to change life and make it better, because it's kind of messed up in a lot of ways. Once you learn that, you'll never be the same again.